morning, everybody. Welcome to Trade Live with IG on the 19th of August. How are we doing out there?
It is wonderful, isn't it? The weather still holding up there, not as hot. Trader friends, good morning to you. We are all waiting for you to tell us whether you've been busy with the red gaffer tape yesterday. Is that a branded top I see?
That is indeed a nice branded top. That's from our tennis day that you remember we did down in the city of London. So I now use this as my paddle shirt, and I do get a few questions. But I've got a very funny story from the festival coming up, Ange.
Oh, I can't wait.
Edinburgh Fringe Festival. I managed to find the only trading show yesterday and went to a expert gold trader who's running a portfolio for as long as the fringe goes on. So I will tell you that story after we look at what is coming up on today's show.
Fantastic. I'd love to know what he's doing. I want to know when gold is going to break out. Right, let's bring on the coming up. Here we have it. We've got overnight action with myself and Richie Rich. We're going retro here as our brand new shiny new thing, trying to trigger maturing here of a studio is being created as we speak. Then we've got Ronnie Agnig or Ronnie Eggnog joining the fray with Rich at 8:15. And beam me up, Scotty.
He's back. Scotty Burning with us for Expert Edge at 8:30. So Anne's going to be running through with Scotty what his expectations are for the rest of the week. That big Jackson Hole coming up, and then good old all sessions. The big moves. What is Intel going to do? What a story we got in Intel yesterday. So we'll be going over that, and we'll be going over all the stories from yesterday, because what a day it was. Trump is well on his way to the Nobel Peace Prize, and we can all celebrate for him. However, I did promise you a fringe story, and so
gold. Tell me. Please tell me it was bullish. Short-term bullish. Please tell me short-term bullish.
Remembering Edinburgh Fringe Festival is all about comedy. It's about theatre. It's about shows. So I didn't know what to expect going into a gold trader show. And I sat down, there was probably 25 people in the room, and it was a Dr. Hiscox, who was a gold expert, self-proclaimed, it has to be said. And the start of his presentation, first of all, when I walked in, he had a gold hat and a gold suit on with a shirt and tie, and looked very smart, Indian gentleman with glasses on. So clearly, you know, a doctor and a gold expert. And he continued through the presentation. It started off with, of course, capital at risk. And then don't expect to learn anything here. You know, this is for education purposes only. So, you know, much like our own disclaimers. But then he went on to basically the whole show is premised on him being an influencer and him going out and telling you all the things. I think he might have watched the show actually, because he talks about stop losses. And he said there are two ways to make money in gold. You can buy it when it's at the low of the chart, or you can sell it short when it's at the high of the chart. But gold always goes up. So never sell it. That is how you make money in gold. And never set a stop loss, because stop loss is like a target for you to lose money. And so this is when it, you know, finally clicked that this guy is just absolutely ripping it out of you know, all investing influencers. But the funniest part was when he is actually running a portfolio of being long gold, and he said, okay, now in the background you see my live portfolio, and he said, last week, as you can see, I was up £130, but on the screen it shows down £67. So he's actually lost money. But the thing that really got me was that it was an IG platform, that he was
Oh,
using.
really? Oh my goodness, you should have taken a video.
So I don't think I wasn't allowed to take pictures. I wasn't there at the start when he said, but I thought, no, I can't take a picture of this. But it did come to live audience participation. So of course he
Oh,
said, oh,
like our chat on Trade Live with IG.
like our chat, but in, live. So there must have
Yeah,
been
yeah.
25 people in the room. And I
Wow.
put up my hand and I said, yeah, I see the platform you're using is IG. Well, I'm actually from the TV show that IG put out, and we would love to have you on tomorrow morning to tell us all about your gold strategy. So
What did
unfortunately,
he say?
he said he wasn't available for the show, that he was a very busy man trading his gold and giving out his expert advice.
Clearly, with no stop losses.
Yeah, but he did say, unfortunately, IG have shut me down because I was losing too much money, and 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 not setting my stop losses.
Overnight action. Let's have a look at that, because not only do we also have a lot of gold news ahead of Jackson Hole, but we've got Apple, we've got Intel. So loads to talk about, Rich. We'll be back after this.
Where are we coming back from, Ange? I thought you were off to make a cup of tea or something.
No, actually, I haven't managed to be organized enough to make a cup of coffee. So I have this flask here, which I'd been very organized and did it last night, but it's hot water, which just doesn't cut it. I need Monkey Man, who goes off to make a cup of coffee around this time, doesn't he?
Well, speaking of which, we have you all on this morning. Pelican, good morning, Ange. Good morning, Scottish man, he says, and team. I think he's saying good morning to producer Phil. And then
And
who else
Cam.
do we have in the gallery today? We can't see them anymore when we arrive in the morning, Ange. So good morning, Cam. There he is, and
Dom's
good morning,
voice.
Dom. Now, this is a lead-in to getting a camera in the new studio, isn't it, Ange?
Yes,
Do you think the first poll of today is, do you think there should be a camera in the gallery when we can cut to shots of Dom, of Dr. James Martin when he's in, and producer Phil, of course, and Cam and Terence? I think it's a strong yes, so I will be voting yes. No pressure on anybody out there.
No pressure to vote, and no pressure after reading my comment on the chat on the left-hand side here. Those of you, as we await Phil's poll that's coming up, wondering what we get up to, all the hard work. It is a lot of hard work in the background as well to make Rich and I look as smooth as we are. Shout out to these lads out there, because there's a heck of a lot that happens to make the magic happen. So if you want a camera, do hit yes. We think there should be a camera in the gallery, in the new gallery.
So I think we're still waiting for the poll to come up, are we, Ange?
There
it is. Perfect.
Here we are.
Good. Now, the important things. Good morning, everybody in the chat. Parky 77 shilling, Ida Rock, Jugger, Steve Davies, TARDIS. Yes, our TARDIS. There we go. There's the sponsorship. And Boise and Akers. But the most important comment there this morning, and the most revealing, is from Neil. Yes, indeed, we are getting a gilt bear steepening, which is worrying. Now, for those that don't know what a gilt bear steepening is, that means that, yes, we're going to get rate cuts. So the short end is coming lower. Let me see, get these right. Short end coming lower, and the long end is starting to actually get quite worrying. The long end in gilts is starting to break out on the yield side. So remember, this is your 2-year, for example, and this is your 30-year. Now, when they go from this point, which they were before, to this point, you can see that the yield curve between the two, go that way. Which way am I going? Oh, this is so hard to get this in reverse. There we go. So that curve has steepened, therefore it's called a steepener, because the 2 years gone down and the 30 years gone up. So that's what we talk about, a gilt bear steepening, and of course it's bearish because it's for the wrong reasons. So that is what the Times leads with this morning. If we want to have a look at the Times, we've got our story there in the business section that is telling you that gilt yields are driving borrowing costs higher to a 27-year high. Ange, what are you going to do on all those mortgages? I hope they're fixed.
Definitely fixed, and I fixed them in good time as well, because I could see that things were getting more and more uncertain. So I've got another 3 more years on my fix. I did pay quite a big chunk though to come out of my very favorable rates on my mortgage. It was a bit painful at the time, because as our trader friends know, you have to pay a separate amount for a different mortgage. And so I had to refinance 3, but it was well worth it. So we're in the money now in the Ong household.
Great news as everybody else's mortgage is going skyrocketing through the roof.
Speaking of which, skyrocketing, we have on the front page of CNBC, all these stories that are implying that we're going to have a higher than expected open, not by much, to be honest. I think it's going to be flat, more like it, because we didn't have a lot, or not much at all come out of the talks between Trump and Zelenskyy. If anything, all that really did come out, if you wanted to pick something, was that there was this expectation that behind the scenes, there was going to be some sort of formalized deal on paper within the next week to 10 days. Zelenskyy saying a package.
I took it a bit differently, actually. I took it as quite a big positive, the result in the meeting.
Well, I kind of think a lot can still happen. There's this talk of this package of security guarantees for Ukraine, but there was an if. It was an if, and that is if there is a huge purchase of American weapons. So there's still ifs and buts everywhere.
But you've got to hand it to Trump. I mean, that is mighty impressive. He's put together the deal. He's got all the European leaders there. He's got Zelenskyy there. And what he's going to walk away with is Europe buying another 100 billion of US companies' defense systems. That is you have to take your hat off to him.
I mean, he has this knack of getting everyone.
You want him in your corner, right? He's getting deals for Boeing. He's getting now purchasing a stake, or at least converting a stake into Intel. And he just continually goes out there and bullies countries into investing in his country. If you're American, that's fantastic. Your president's doing the job. If you've got Starmer, or if you've got Merz, or you've got Macron, then they're too busy trying to regulate and put more red tape on. I can't remember the last time Starmer went out there and got $10 billion deal for AstraZeneca and Glaxo.
No, and his timing as well. I mean, you got to give Trump, credit for his timing. He's done so ahead of one of the biggest defense summits that's happening here in the UK in, beginning of September, which is the DSEI. It happens not too far from where our offices are in Excel. And the biggest, country presence, if you like, that will be selling there will be the United States. So, yes, I mean, either way, you heard me talk about my theory, right? Whether or not there is or is not a deal, it's still, in my mind, a positive for defense stocks. Meanwhile, we got, this Jackson Hole.
Now, Ange, you've got to question: is it European defense stocks or is it US defense stocks? Because that's a big difference now. $100 billion goes a long way. That's quite a few missiles. And Trump has now said that clearly he's only going to participate if it's American companies getting it. Is that a negative for European defense stocks?
Well, I would say have a nice, diverse basket, mix of US and European, but be selective, as I've said many times to RSACs and the rest, because you want to probably be more weighted onto those, not just with missiles, but drone and anti-drone capabilities. So, make sure that your mix is the correct one. Don't put all your eggs in one basket. I certainly have, you often tease me about this, but I say if you've got a big contractor, whether it's Northrop Grumman or BAE Systems, stay big in that space.
There's, yeah, alongside the $100 billion deal, there's a $50 billion deal for drones on the
Mm,
table as
mm.
well. So absolutely, you're 100% right there.
Jackson Hole, everyone converging there. I was just wondering whether you're up for a stake, because the second best place in Jackson Hole is where the Sage of Omaha goes to have his stake, and apparently he goes with no security whatsoever, which is fascinating. Um, so this place, trader friends, if you are, um, you know, oh, want to meet the sage. I know Isar is a huge fan of the Sage of Omaha. He loves going there because you get those. Have you been to the steak houses where they tie that bib around you?
I wonder where you're going with this, Ange.
And there are all sorts of um, things that the cult followers talk about. You can Google it if you want. If he has a big appetite, and he orders, several rounds of sides, then
Are you
it's meant to be
building
good
up
for
to telling
markets.
us that you've just bought a stake in Berkshire Hathaway? That's what this
No.
is building up to, isn't it?
Can't keep any secrets from the McDonald. Can't keep any secrets.
But you
um,
have had a success, haven't you? You had a great day yesterday in one of your minnow stocks.
I did. And also, I'd love to get your advice, and our trader friends as well. Yes, I have been dollar averaging into Berkshire, but I also started dollar averaging into Green Lane Renewables. And for those of you that don't know Green Lane Renewables, if you want to hit it up for us, Phil, it is a company that takes all the stuff that humans don't need, our muck, waste from farms, and they create biomass. My trade, Rich, was meant to be 30 to 60 days. I put it on Friday for Green Lane Renewables, and it's jumped by 62%. So
Nicely
all-time
done.
high. So I don't know what to do with it now. Thoughts, McDonald?
Which, yeah, we're struggling to find it, Ange. Green Lane, as in the color, and then
Yeah,
LANE.
renewables.
Well, there's Holdings, Green Lane Holdings.
Yeah, Holdings is probably all you're going to get on the IG platform, but as you can see, it had a big jump there. But the company that I put a position on is Green Lane Renewables. It is at an
Okay.
all-time high, and yeah,
Okay,
uh,
you're wondering what to do now that it's gone up 61%.
exactly. And the technician in me thinks, well, first go left, look at the chart, but it's all-time high. And the other thing as well with this company is it's recently had really good results. Um, but the poker player in me, and you heard us talk about this a great deal, myself and Frank, is that you if you've got a good run, you take money off the table, and statistically, you're not likely to have another good run. So that's why you take money off the table. What do you think?
Yeah, I tell you what, we'll look more into that. I'll do a little search of it today and find out the kind of fundamental side, because it sounds like you've absolutely nailed it from the technicals. But let's see the market cap. Was it a contract win? This kind of thing, and then we can make an assessment. But that's a nice win.
Mm.
And another company that had a nice win was Intel. In the after hours yesterday, we
There's 2
saw
billion lifeline.
So from Softbank. So Softbank investing 2 billion into Intel, and that's along with this potential 10% stake from Trump. Now, the Trump news didn't go down too well because that's talking about converting some of the subsidies that they've received from the CHIPS Act into equity. So that's not so great. But then this news that also SoftBank were interested took them right back to the highs, 24.80. And yeah, certainly helping us out there in a fantastic week. Everything's coming together nicely. Palantir down another 2% yesterday, and you know, we're getting some nice theta in those options positions. They just keeps on paying every day nicely as Palantir goes lower as well.
The big thing about Intel as well is that you know, Louboutin, he's really well respected in the industry, but the market is aware that he can't get Intel to turn around like that, right? So this $2 billion lifeline from SoftBank is seen as a big plus, because it gives those who are holding Intel confidence that, you know, SoftBank backs it. It essentially becomes Intel's 6th biggest shareholder. You could sit on both camps. You know, yes, it's going to move the dial for Intel. Others like Amir Anvarzadeh from Asymmetric Advice is saying actually it isn't. But what it does is it buys Louboutin time. This is what it does. It gives him time to turn Intel around.
Great. Okay, what else did we have out yesterday? Well, the US rating was affirmed by S&P. So they noted that it was the tariffs that helped them come to that conclusion, that tariff revenue is going to offset some of the ill-disciplined spending legislation. My words, not theirs. And then we also had Palo Alto up 5% after hours, stronger than expected forecasts there. So then the story, of course, that Ange touched on, the Apple story, if you want to tell everybody, give them more details on that, Ange.
Exciting stuff. So do you guys, Trader friends, remember last year, and Terence in the gallery as well, and I were moaning about this because Apple, it transpired that the UK was going to give Apple, if you know, there was a serious situation, it was going to give Apple access to user data here in the UK. Well, the story has changed now. So now it seems the latest story out of the FT as well is that we are seeing the UK government do a U-turn. And so Apple is not going to be forced. They won't be able to ask Apple to give them that data. Why this is very, very important is that Apple was under fire, especially here in the UK, by those Apple users. I'm an Apple household, because there was a great concern that they were going to, you know, have a backdoor to all your secrets, you know, your all your banking details. And we know that there's been rising concern since the cyber attacks on many of the retailers recently here in the UK. Rich,
right.
Are you happy about this story?
Time. Oh yeah, it's wonderful. Wonderful. Just getting them to pay tax next and it'll be great. Okay, so it's time for chart of the day. What genre of music are we going to have?
Exciting. I like the cowboy ones recently, so I'm hoping.
It's a US stock today, team. So let's hear your guesses. Is Hamish on there? Let's see. Already. 3, 2, 1, go.
Yeah. Yeah. Yo, I woke up late with my coffee hot, turned on the screen to check what I got. There's a line on the chart going straight through the roof, but is it real or is it spoof? Rich says sure, and Ange says nah. Producer Phil just drops his jaw. He's got a vibe, but he never tells. He just shrugs and says, only time will tell. Guess the chart, guess the trend. Is it on the rise or near the end? Guess the chart, feel the burn. One good call and it's your turn. Guess the chart, don't delay. Is it going up or running away? Guess the chart, take that shot. Win or lose, you get what you got. Check the wick, check the base. That candle's got a poker face. I'm zooming out, I'm feeling bold. Could be vintage Nike, could be gold. I drew some lines, I broke my pen. RSI screaming not again. Mac ED says I'm on the track, but last time that lied and I never got back. Guess the chart, guess the trend. Is it on the rise or near the end? Guess the chart, feel the burn. One good call and it's your turn. Guess the chart, don't delay. Is it going up or running away? Guess the chart, take that shot. Win or lose, you get what you got. Now we're live on Trade Live with IG. Big lights, bright screen full of energy. Rich is smirking, says short that peak. Looking for the drop every day of the week. Cam's in the booth with the coffee strong. Dimes on comms, keeping angles on. Terrence got timing down to the beat. And Jarnez calling shots from the edit suite. Dr. Watson's watching it all unfold. Every wick, every move, every market told. It's chaos in class and a little bit wild, but we do it with charts and a cheeky smile. Guess the chart, guess the trend. Is it on the rise or near the end? Guess the chart, feel the burn. One good call and it's your turn. Guess the chart, don't delay. Is it going up or running away? Guess the chart, take that shot. Win or lose, you get what you got. I'm tapping keys like it's 95. Got floppy disks and trades that dive. Chart so wild I can't relax. Could be fangs or just the facts. Ainge says diamond hands all day. Rich says hedging's the only way. Phil just smirks and hits record. He's guessing too, but he looks bored. Guess the chart, guess the trend. Is it on the rise or near the end? Guess the chart, feel the burn. One good call and it's your turn. Guess the chart, don't delay. Is it going up or running away? Guess the chart.
Friends. Hey, trade friends, welcome back. Loads of comments on the chat. Maturin saying great music. Producer Phil, I was just saying that I can imagine Rich bopping along in his Nikes and a hoodie to this music.
But it is our king of Discord that came out first with SD Lauder. Is that right, Producer Phil? Oh, wow, they've changed, the Producer Phil's changed the name as well to S3 Lauder.
Wow.
Is that sounds better, doesn't it? What?
There's a lot of saying steel loader. That's another.
There's
name.
a lot of branches of that shop, I hear.
Look, Boise, did you say something naughty? Because the message has been retracted there. Oh, Bigger Beers, good morning to you. Loads of people on the chat as well. Andrew McKilvey, thank you for your kind advice there, saying take half. Maturin is aware of the Green Lane renewables that I mentioned earlier. Essentially, cow poo processor.
This is Maturin's first win on Guess the Chart, isn't it? I can't remember our King of Discord winning one before.
Yeah, I think it is. Maturin, is it your first time?
Right, let's go through upgrades, downgrades. We've got a downgrade of legal in general. UBS, who do you think you are? They have been cut to neutral with a price target of 275. So we're not too worried there. I'd be happy. Legals at 275 as they go ex-dividend in 2 days' time. So the stock currently 258. So I don't see that too much of a negative downgrade. And then there's not too much else around. Ange, do you see any upgrades, downgrades that are worth talking about?
Yeah, my filter is coming online now. H&M, Barclays cutting that price target there. We also have Merck getting a price target cut from Barclays to 120 euros from 150. Right,
there it is. The the opening bell, the London Stock Exchange Scottish office. Oh, that's the point actually. Anne's right. You take control just now.
Yeah, let's I'm just putting up the indices for us, if I may, and also sharing my screen. Oh, you're driving, great. Now what we are seeing here right now is pretty much a quite a safe day. I was trying to get to my other chart, so just buy me a bit of time there.
Right, so let's look at the winners on the day. The winners are NatWest up 90 basis points. Whitbread, Premier Inn. Now, I am staying in a Premier Inn this evening in Edinburgh, so that's up 65 basis points. I will be able to judge to see if these are really as good as the Times makes out. Then Lloyd's 83.32. I have taken that position off now. Remember, I was long Lloyd's, short Barclays, short NatWest. NatWest was performing a little bit too well, so it looked like any alpha had been already juiced out of that, and Lloyd's wasn't going to outperform anymore. So taking my UK banks trade off. I still think Lloyd's goes higher, but I had it hedged against NatWest and Barclays, and that wasn't working. Marks and Spencer's up 40 basis points, and IHG up 50.
Speaking of which, lots of losers there. First, NEO down 1.3%. We also have BAE Systems down 0.2% there. Drug makers in view as well. AstraZeneca is down 0.5%. Actually, it's come off a bit now, but GlaxoSmithKline is also lower. For those of you watching the drug space, Novo Nordisk also had its target price cut by TD Cowen.
They've hit this legal in general by 1% because UBS say you're only going to make another 8% on this stock in the next 12 months. I mean, how basic are these algorithms? It's absolutely pathetic that UBS telling you can still make 8% in legal in general sees them down 1%.
Yeah.
Just hit by the algos. It's just so basic.
And we've also seen some of the other sin stocks. Issa was talking about this when we spoke 2 weeks ago. But it seems like he was wondering whether we would see a rotation into the sin stocks. But, you know, the British American tobaccos still showing a decline there. It has not shown a bounce just yet. Some of the other names that are also slightly lower today, your National Grids and Centricas as well. Should we cross over to Germany now? Let's head over
Yeah, we're seeing the Siemens up 83 basis points. That is one of the stronger ones, along with Porsche and Lufties. So Lufthansa up 0.5% this morning. Elsewhere, ASML back to the high, 644 euros for ASML. So that one is getting up there. And then we've got, what are you seeing on the losers side? Oh, it's Rheinmetall again, Ange.
Yeah, Rheinmetall again. Andrew McKelvey, R. Sachs. If you are looking to leg into that, you have another opportunity. Also,
well,
we've
no,
got,
but Trump's stealing all your money. That's why.
Yeah.
Trump is taking all that European defense spending money to get his own companies. That's the problem. So that is being taken as a negative by European defense stocks this morning.
Yeah. You know, as I said, make sure if you're going to position, make sure you go for the larger ones, and not forgetting, you know, the big US names as well. After, you know, Rich rightly pointed out, you know, Trump is looking like he's maneuvering all that spend to the US from the Europeans. Some of the other names on the losers list, not that many today. Total is down a bit, and Fresenius is also lower. Right. To
over
France.
in commodity world.
Commodities
you're going to
first.
France, are you? Okay.
Yes.
Let's go to the French.
The French first, because Here we are. That's the winners list. Any of those pop out to you, Rich?
So I'm looking at my own list. So I've got SocGen up 60 basis points, Michelin up 60 basis points, Schneider, Stellantis trying to recover there. But yeah, nothing too downside. We've got Total again, that was down yesterday.
Yeah.
And Danone.
Yeah, let's have a look at the losers. It's more a risk on day, has to be said. Thales, they're down 1.3. So we're seeing that continuation of that trend of European defense stocks not having a good session there, and Rentokil down slightly as well. So let's have a look at commodities now. Gold in view there after Rich came back from that trading event in the Fringe, and as we count,
Dr. Wilcox is talking it higher.
Yeah, and as we count down to Jackson Hole as well, we have a great deal of interest right now in gold because any comments that suggest further uncertainty could give gold a bit of a bounce. It has been stuck in that range though, and it's not making any headway. This looks like a really good one to trade using options. Currently, it's holding steady, of course. We have seen UBS raising its gold price target for the end of March 2026, so end of March next year, to $3,600 an ounce. But if we see
think they're right,
this,
Ange?
I'm not sure they're right anymore, especially after that Zelenskyy Trump meeting earlier this week.
So you're taking the peace in Ukraine to be more of a negative than an interest rate cutting cycle would be positive?
Yeah, at the moment, I think that there could be potential headwinds for gold anyway, because if Trump is able to knock out uncertainty in Ukraine, Russia, then gold could come down below that 3,300 mark. And I know lower interest rates are good for gold, essentially. But we talk about this a lot with Simon Popple, that his MIDI acronym, right? Market uncertainty is the first one in that acronym. So if we knock out uncertainty in Ukraine, then potentially it's further downside. This UBS target as well made prior to the talks this week.
So right, that's the poll of the day. Do you think UBS are right? Are we going to see gold go higher from here to 3,600? Are we thinking that UBS are wrong, and you're more on Ange's camp that gold will go lower on potential peace with Ukraine? I'm sure he'll put only time will tell in there. Or gold remains fairly priced at the moment. So will we see gold go higher towards 3,600 like UBS suggest? Do you think gold goes lower because of peace deal in Ukraine, or do you think that it stays somewhat unfazed by the peace process and by interest rates coming lower potentially this Friday? Some dovish expectations sought from Jerome Powell in his speeches.
I mean, Rich, we don't have to look too far in the commodity space for something else that is giving us a signal that we could potentially get this Russia-Ukraine deal perhaps across the line, and also this would essentially lead to lifting of sanctions on Russian crude. These are all ifs, but take a look at WTI down more than 1%, or actually 1% now. And same thing for Brent as well, just adding that to my workspace and giving you a daily view there. Take a look at that. It has been progressively falling in terms of the daily chart. You know,
we're just getting Friar Tuck asking the time frame on that. Time frame's March. So by March of next year, where do you see gold?
2026. Yeah. And so just whilst you're looking at this chart, here's a target for you. This is from the commodities desk at TD Securities. An outcome which would see a ratcheting down of tensions, would see oil drift lower towards their $58 per barrel Q4 average target. So that's their Q4 2025 target, $58 a barrel.
Not sure I agree with that, actually. I'm just going with Tom Price said. He says that's rubbish, that you won't get any more Russian oil on the market because it's already on the market. So it doesn't expect to see gold go lower. Now, we are going to touch on gilts. Ronnie and I are going to talk about gilts in about 4 minutes time, because that is the really worrying thing of the last 48 hours, is that move higher in 30-year yields. So that's coming up in 4 minutes. But, Ange, do the viewers want a camera in the studio or not?
Ooh, let's have a look. Let's have a look at the results of that.
67% of you want to see producer Phil's beautiful face every morning, and only 18% say no. And I fancy that's the 3 people in the gallery that are voting in the poll themselves.
I know that Terence is very shy, and so is Cam.
So yes, sounds like time to rejig their contract, because that's what they've always argued before. Oh, we're not allowed to be seen.
For those of you that do want to see them in action, I have taken the pictures, you know, very, very respectfully, you know, of their privacy. I am posting some of these pictures on Twitter, some behind the scenes as they rip up our old studio and replace it with the shiny new thing. Where are we at the moment, Phil? Just give us a quick update in my ear. Is the green screen off the wall? The studio
has been emptied, and has the bell survived? The bell is gone. That is
what
the
do you mean by it's
exclusive
gone?
story of the morning.
What do you mean by the bell is gone?
Is it in the bin, producer Phil, or can we still rescue it? Because I think that should be the potential prize for a competition. I think for the Fantasy League, we can come up with something better than that. Now, Fantasy League is something else we're going to be talking about in 3 minutes' time. Myself and Ronnie are going to be showing you week 1 of the league table of our football Fantasy League. It's definitely not me that is on top of the league, I'll tell you that, but I'll still show you it anyway. Right.
Well, just before we go, just some headlines coming through. Those of you here not shopping enough in Asda, sales down there 2.6% in the 12 weeks to August. Tesco, though, sales up more than 7%. UK grocery inflation was 5% in the 4 weeks to August, says World Panel. So that is the latest in terms of grocery sales numbers out of the UK.
Wonderful. Right, we shall see you in a couple of minutes. Angeline, we'll see you in about 20.
Right, with Scotty Burns. So slam your questions here, and don't forget to slam the like and subscribe button, trader friends.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns, that's something else. Watch and learn. Come on, Pat. Cash returns, come on. Guys, where are you going? You're not going to get better than cash returns.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Here he is. It's the big Ron Dog. Good afternoon to you, Ronnie.
It's actually morning. I've been up since I'd say 4 a.m. maximizing shareholder value, but it's nice of you to show up, Rich.
Oh, you seem to forget that you were doing the show then. What you were too
Well,
busy at the gym, were you?
I don't know what you're talking about. I live for this show. I'm always ready for the show.
So for anybody watching that was not part of that break process, producer Phil was having a panic. Ronnie, where are you? Ronnie hasn't dialed in.
You know what? For producer Phil, I'm always ready. You know, it's just sometimes I was busy maximizing my clients' value. So, you know, taking care of our clients' needs first.
Those champions, those clients feel championed
We always
by you,
champion
my
the
friend.
client at IG.
Right, Ronnie, today we have to give everybody a very quick update on the Trade Live with IG Fantasy Football League, which is called Trader Friends.
Ooh.
Because I've saved it for you being here, my friend, because you are in bronze medal position at this moment in time. Look at that. John Finbar is killing it, all right.
I'm shared second place, is it?
No, you're in third.
Okay. But it says a 2 in front of me. A 3, sorry.
No, you're right. Old. It does say 2. So second equal for Mark Lamb and Ronnie. Then we've got James Watson, our very own Dr. Watson from the gallery, in 4th place. Dan Gummer is our video editor and our video expert there in 5th. Gavin Ackers from the chat in 6th place. I'm not sure what the name of that team is you've got there, Gavin Ackers. Tell us more about that. Neil Camish, scouting for Borough. He's a big Borough fan there. And yeah, now Monkey Man at 8th. Monkey Man, give us a heads up that you are out there and well. Then should we go to the bottom? We've got Aaron Bright, of course, friend of the show. We've got Luke Moore down in 15th place.
Oh.
We've got Phil in 16th, and we've got myself in 17th. Just managing to stay out of relegation zone. Relegation zone there is Ida Rock, Justin Wilson, and Steve Davies. Steve, what's going on? Come on, Steve, big friend of the show.
I have to admit, I was using, I asked ChatGPT if it could give me some suggestions, but I quite quickly realized that the data was not going to help me. I asked it for, you know, the ultimate lineup so I could beat Phil Thompson, but it suggested me to put in Trent Alexander-Arnold as right back. So I kind of quickly realized I had to rely on myself.
Oh dear. Oh dear, oh dear, oh dear.
And also a point on my name. I selected it just in honor of my favorite viewer, Frosty, Socialist Swedes.
Right, good stuff. Ronnie, now tell us what you've been looking at in the past 4 to 8 hours. What's been going on, my friend?
Yeah, so I was talking with a client the other day, and he is so as you know, I've been quite adamant that we're not going to get a rate cut this year, but I did change my mind once the data changed. But he is still persistent that we're not getting a rate cut, and so he's saying we're not getting a rate cut, and he's longing the banks as a result of it, the US banks in the US, of course. However, I disagree. So my point is I'm looking at the consumer staples. I think the consumer are going to get more disposable income. So I'm looking at the Unilever, the Procter and Gamble. Those are the companies that I'm looking out for this coming days. But also in the UK, I'm taking another approach where I'm looking at a short position against the Tesco's and the Sainsbury's due to the new property tax coming in, as it was told that roughly 5% of their stores could become unprofitable with the additional tax that could be around 500,000 to 1 million per store. And if you think about it, these are small margin businesses. Tesco is a massive company, but they only have 420 million in profits. So I'm looking at a short of the a pair trade where I'm shorting the on the demo, of course, shorting the UK supermarkets and longing the sort of consumer staples.
Nice. Okay, well, it seems all very well thought out, Ronnie. Thank you for giving us that.
Thank you very much, Rich. What do you think of my take?
There is a big story this morning, right? And that is if we can get the times back up. I know producer Phil has the times, and the main story there on the business section is about these gilt yields. Right now, this is starting to get quite worrying, and it's a slow burn process because the government borrowing cost pushed higher on Monday as the 30-year bond market rose to within a whisker of its highest in 27 years. So those are the 30-year gilt yields touching 561, and that is continuing to worry investors, and especially, even stocks like Vodafone, right? We talk about
Vodafone.
Even Vodafone. I will admit that this is potentially negative. Vodafone, still does have quite a bit of debt. It's not coming up soon, but we've got those worries. So normally I'd say, right, we push to defensive, but when your defensive high dividend stocks are being judged against a 30-year gilt yield of 5.61%, you'd rather be in gilts than you would be in the high dividend stocks. So just be careful. If that goes much higher, you might see money move from UK defensive high dividend stocks into 30-year gilt yields. So now, do you want to be in 30-year gilts? That's another question, of course, because the reason for it is this government borrowing and the stubborn inflation that we've got as well, right? So inflation heading towards 4% in the UK.
Yeah.
What do you do there? What way do you go? Do you stick in your high dividend pairs, or do you put money into gilts?
That's an interesting take. I mean, one would usually go to, select, a legal in general or some other UK dividend king. But when the option is there to, basically put it in risk-free or as close as you can get, I think we could potentially see some outflow from the defensives, as you say. So, you know what, Rich? You actually have a fair point. I think you have an interesting take on this one. I am inclined to agree, but it also says something more about the overall confidence in the UK economy that the gilts are so high. I was reading in the FT, the free edition that you get in the airport, of course, that the Italian bonds, the gilts of them are lowering, and they're coming down to the same level as France, as a sign of the confidence that the market has in Giorgia Meloni's economy. And it seems like we're going the opposite direction for Rachel Reeves and the UK. So I think it breeds sort of a bigger concern than just the allocation of the dividend stocks, that the gilts are so high.
So let's take a look in the UK at the moment. Guess what Forexpo is doing today, Ron Dog? It's up 8.5%. It's a high risk one, isn't it? But do you think we're heading towards a deal in between the Ruska and the Ukraine?
In the Ruska and the Ukraine? Well, I'm not quite sure, because I'm not sure if I missed anything, but I didn't feel that anything concrete came out of those talks. I mean, the Russian media came out and said no deal is going to be signed. I mean, Trump has said that he's going to call Zelenskyy, but I'm not seeing anything that's sort of convincing me that we're going to see a peace deal. And I think Forexpo is stock that sort of goes, it's sort of like a tandem of the development of the peace talks. If you want to see how the peace talks are going, you can look at the Forexpo stocks, as completely all of the exposure is in Ukraine, pretty much. For me, I think this is too volatile and too sort of exposed to the Russia-Ukraine conflict. So personally, I'd stay away. I'm not sure what you're doing on this one, Rich. I know you love a bit of mineral stocks.
Yeah, no, I am the same. I haven't touched this for quite a while now. If there wasn't the problems in the background, we got the problems of the previous owner also having arguments with the Ukrainian authorities over tax and was it fraud even? So you know,
What?
been very careful there.
You're saying that the
Right.
Ukraine government is not fully cooperating and on board and keeping everything green light? That's crazy, Rich.
Okay, so we've got JD Sports going higher on the day by 3.5%. That's having a strong morning there. BHP also, and then Glencore. So it's a strong day for the mining stocks. Now, have you watched our podcast yet, Ronnie?
Yeah. Last night, around 11:30 p.m. I was woke up.
That's why you slept so well.
Yeah, exactly. Woke up all sweaty, couldn't fall asleep, and again, so I turned it right on, and I heard you losing your mind over 85% allocation to equities, and I said, "Oh, that gives me peace of mind."
So, Ronnie, we've had some statistics come through. Now, there are 2,300 investing podcasts in the UK. What number in the Apple charts do you think we've managed to get up to after 6 episodes?
Okay, so there's 2,300. They have two very interesting hosts, and then you. I'd say due to the drawback of the third co-host, I think you fall up in the upper quartile. So I'd say
let's see your math. So what's the quartile of 2,300 then? Go on. Is
pretty
it
high.
625?
Pretty high, something like that.
So we are number 8.
Number
in
8
podcast, the Apple podcast tables. We are already at number 8, so we are on fire, cracking towards that top 3 slot, like you in the fantasy football league there.
That's impressive, Rich. I have to give it to you. It's almost like you do this for a living.
But as you say, it's the other two gents. I'm just jumping on the back of those two. So Poppy in the chat, congratulations for that success so far. If you haven't watched The Art of Investing yet, then where have you been?
Yeah.
We are running a portfolio, a model portfolio, and that is a long only. And the guys, of course, have worked in pension funds. They've worked in hedge funds for the last 40 years each. So they are as expert as you get. And I'm just there to.
So they've been working for as long as you have, right?
Approximately. If you put them together, then they've been working for as long as I have, Ronnie. Yeah.
Right. Because you work double time, so you make up for it.
That's right. Now I can exclusively reveal that this week's topic, which will be recorded on Thursday, is the US market currently in a bubble? That is your topic of the day, Ronnie.
I'll tell you right now. I'll tell you for free. No need to tune in. It is.
It is. You're saying it is, right. Well, that is going to be our next poll of the day. Is the US market stocks currently in a bubble?
Time will tell. Only time will tell.
Only time will tell. And we do have the other poll results. Let's check what those are. Now, we were talking about your favorite subject, Ronnie. We were talking about gold. We saw UBS come out with a gold target of 3,600 for March of next year. We asked the viewers what they thought, and 39% of them say that gold will be unfazed by the peace process, and interest rates going lower will help gold go higher, but only 39%.
I'm still bullish on gold, but I'm not as bullish on gold as I used to be. I think I was talking about a 4,000 price target by the end of this year. I don't think we're gonna get that, but I think if you look at the sort of the digital gold, Bitcoin has been doing extremely well, and I think that's an indication that people are looking for a store of value, which you can do with IG crypto. Buy and hold crypto such as Bitcoin. But for me, I think cash is not really where I want to hold my money, so I wouldn't put it in cash, but I'd rather put it in something like gold as a great store of value. So I think that's what a lot of people are agreeing with, and holding it in gold, I think that would be more and more prominent, especially as we see the central banks increasing their acquisitions of it.
Well, hang on. If you don't think gold's got much upside, would you rather be in 30-year gilt paying 5.6%, or would you rather be in gold paying nothing?
Ooh, that's a good question.
It's tricky, isn't it? And that is exactly the kind of conversations we're having on The Art of Investing, because we've got our pot of money and we're trying to decide, where will we see 10% upside this year? How will we get that return, no matter if the stock market is in a bubble and it drops 20%? We've still got to make 10. Now, tell me your demo account is doing that, Ronnie.
No comment.
How's it going for the year?
It's been shut down by compliance. They're suspiciously too good trading.
Oh, very good. Just like your fantasy team.
My fantasy team is going to the moon.
Good stuff. Right, Ronnie, thank you very much for getting out of bed. Thank you very much for joining us this morning. It's been wonderful to see that beautiful face.
Likewise, Rich.
And yeah, we'll be back in the studio soon. Don't you worry.
Have a good day, everyone.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. In the last video, we talked about earnings per share, or EPS, using pizza slices to explain how much of a company's earnings you, as a shareholder, would get for each slice or share that you own. But today, we're taking it one step further, and we're using EPS to calculate the PE ratio. And this will help you understand what a share price actually represents. The PE ratio stands for price to earnings ratio, and it's one of the most widely used tools to measure a company's valuation. But what do I mean by that? Valuation is essentially the price you pay for something compared to what you get in return. Is it worth it? Whether you're buying a car or a house or shares in a company, valuation helps you decide if the price you are paying is fair. Now, in the stock market, what you're getting is a share of the company's profits. The PE ratio tells us how much investors are willing to pay today for those earnings. But why is this so important? Because it helps us compare companies and decide whether an investment looks cheap or expensive relative to others. Now, let's take a British construction company, for example. Imagine this one block is the company's EPS, and that is £1 per share. When you're buying a share, you're buying into the future profits of that company. But to avoid overpaying, you need to know how expensive the price is. Now, too many people jump in to buy a stock just because they love the company, without paying attention to the price they're actually paying. And it might sound crazy, but a share price alone doesn't tell you how expensive a stock is. The valuation does. Now, this is the important part to get. If the EPS is £1, then how many blocks of earnings am I willing to pay for a share? What's the right price? Is it 12 times or £13? Or if our construction company's PE ratio is 14, that means investors are paying 14 times the current earnings to buy a share in the company. So the share price is simply 14 times or 14 blocks built on top of each other. Now, why have I chosen 14 times? Well, that is actually the price of the FTSE 100. Adding all the profits together of the top 100 British companies and then dividing them by the number of shares, we can say the FTSE 100 is trading on a PE ratio of around 14 times 2024 earnings. Now that looks fairly cheap relative to its own historic PE of 16 times. Now the PE ratio can be seen as a snapshot of investor confidence. A lower PE ratio might suggest that investors think the company and their profits aren't growing very fast, while a higher PE ratio often means investors are expecting big things in the future. Now let's compare our British construction company, or the FTSE 100, to the S&P 500, which tracks the 500 largest companies in the US. Now its PE ratio is currently 24 times earnings. And that means investors are paying 24 times this year's earnings per share in the S&P 500. And you can see the difference right here in that valuation. That's very expensive relative to its own historic value of only 18 times earnings. But here's the big question. Why is the S&P 500 trading so much more expensive than the FTSE 100? Is it overpriced, or are there other factors at play? Well, that's what we'll explore in the next video when we look at something crucial, the earnings growth.
Hey trader friends, welcome back, and we bring you Scotty Byrne all the way from his special studio up in his loft. Scotty, good to have you on.
Morning. It's a little bit different to what we're used to, isn't it?
It is a bit different, but we make it work here. We roll with the punches here, and what a reward we'll have at the end of this, because we'll have a fantastic brand new shiny studio. Yes, but you're right.
We will,
it is.
but I think yeah.
It is a bit
I
harder
think
when
after all this, mm,
in our own
yeah,
places.
it's a little bit like those outside broadcasts you see, where someone speaks and then you've got 5 seconds and there's a response. I'm just hoping no one appears in the background in my phone.
Who's
I think for all
behind
the
you?
work, exactly. I think after all the work that all the producing staff have had to do, we might have a new studio, but all the producing staff might need a month off. So
Yeah, yeah. And I might have lost some hair by then. Speaking of losing my hair, those of us, looking at what happened last Friday, also looking at the, the gilt yields. You heard Rich talking about that. It's worth considering.
yeah,
Yields reaching those meteoric levels, 5.6% mid-afternoon yesterday. That is around, if I'm right in saying, correct me if I'm wrong, trader friends, around 1% higher than during the Liz Truss budget saga.
that is very true. But I think it's also a reflection of the market structure, right? Because if half your gilt ownership is with hedge funds,
Mm.
then if they know that you have to come to the market for more money, they're going to do what is necessary in the mechanics of the market to engineer higher yields. Because if you're lending the UK government money as a hedge fund and you know that they need more, why would you not look to demand for higher rates? These are, I don't know how the market is made up. I mean, I think in the US, 24% is held from the government and institutions and so on. I don't know how much hedge fund ownership there are of US treasuries, for instance, but I do know in the UK it's quite high, I think, relative to other markets. And this is not to be anti-hedge fund, because if they're providing liquidity for your government and they're lending you money, then they're entitled to a fair rate of compensation. But however, it also does mean that you are sometimes subject to a bit of a lack of liquidity, because unfortunately the UK gilt market is not the US Treasury market.
Yeah, absolutely right. And James Bennett on the chat as well, chiming in, making a good point there. Reminder, the UK will have a sovereign rating update. If the US market was in a bubble, you don't make money shorting it, that's for sure. Also, another catalyst that I have firmly in view as well is, of course, we have that CPI print on Wednesday. The market now, Scotty, pricing in no further rate cuts from the Bank of England in 2025. That's compared to 54 basis points, so thereabouts in the US.
I think it unfortunately shows you the corner that the government is backed into. And you're having to walk a tightrope of relative lack of liquidity in your treasury market, the conflicting factors of where, as you say, rates are going, potentially where inflation's going, labour force growth, and if you don't have your own version of the Donald, who's happy to throw convention aside, then you have to stick to what's a difficult spot. And look, it's a really tough job for Andrew Bailey. It's a tough job for the government, and unfortunately, we may just have to grit our teeth for a while, and just kind of see how this all plays out.
Speaking of which, how it all plays out, loads of our trader friends here, we had a poll earlier about whether or not the US market is currently in a bubble. Please do take part if you haven't already. Put your answer in. Actually, the poll, I believe, has just been completed, 27 votes there. 40% said yes, and it will pop big. 29% says believe so, but a small bubble. And 14% say not for me, just good growth. Time tells all, 14% there. What's your view, Scotty?
I can imagine Rich's cursing at another time tells all version of the answer.
Rich there.
Well, I did participate in the poll as I was waiting to come on, and I did say believe so, but a small bubble, because in spite of relatively high rates and the tariffs and the headwinds that have been thrown at it, you cannot argue that the US economy as a whole, or the corporate economy as a whole, is functioning well. However, I completely get some of the comments. As I see, the latest one about labour markets in the US. Here in the US are very slow right now. Access to capital is difficult to small, medium businesses. Unfortunately, the US runs on large caps, and a lot of their companies now are making money overseas. And yeah, I mean, look, it's not dissimilar to the UK. A lot of businesses are finding it very difficult to access liquidity. And of course, I'm not comparing the UK and the US, but in the US, it's just that sense of exceptionalism does take a very long time to start reversing. I mean, if you remember, and this is in no way saying it's on the cusp of the global financial crisis, but from when the first kind of subprime hedge fund went under, that was in 2006. The market continued to go up for another year. And again, I must stress, I'm not suggesting that this is the territory that we're in, but yeah, unfortunately, unfortunately, if you're a bear, the flexibility of the US marketplace and its durability of the economy is a frustration for the bears.
It is a frustration, and I'm going to be devil's advocate here. And you are right. I remember 2006. There is a lag. There is definitely a lag, but this is my devil's advocate point. The US labor market, we've talked about how resilient it is. Consumers as well, each time we think there are going to be cracks, with consumer spending, we just don't seem to see it come through. Shout out to a fellow respected ex-colleague of mine, Jamie McGeever Fever, who crunched some numbers on this. Can the rich continue to prop up US consumer spending? I highly recommend, trader friends, if you haven't read this, have a look at this, because what it is essentially saying is that the base of richer or considered richer US consumers has grown. And also, when you split groups in the US, it becomes very clear that total spending disproportionately comes from the rich. So take a look at this chart here. That red line there, I'm going to zoom in for you. The red line there comes from the high income, 80 to 100%. The middle income is the green and the lower income is the blue. And you can see that the middle and the lower income, could be faltering slightly as we get closer to where we are right now, but actually the very rich continue to spend. We saw a lot of this happen as well after we'd said Doge might unravel everything. Remember that those months we said that perhaps the high unemployment will finally start to peter through and hurt consumer spending. But by and large, we haven't really seen that happen, have we, Scotty?
No, we haven't, and I guess you could argue it's not that dissimilar to the UK, where if you go out most nights in the week in the city or the West End, the bars are busy, the restaurants are busy. We did have a chart on the show a few weeks ago that some of our trader friends might remember, inflation for the common man, which was outpacing wage growth, which would very much fit in with that narrative around why spending for real people in the real economy, is slowly tapering. But as you said before, anecdotally, if you go to most UK airports now, they're absolutely packed. Whether this is everyone who's living off a credit card and so on and so forth is sort of spending their future. But I would imagine it's potentially not that dissimilar in the US. Unfortunately, is also a great example of the wealth divide that's in the Western world, which is vexing a lot of people.
Yeah, and it's totally there's lots of data that shows this, because as you rightly say, those who tend to be in that category, I mean, they're likely to have a pied-à-terre, or they're likely to stay closer to town. Lots of trader friends on the chat this morning saying that they're concerned about credit card debt and lagging repayments or mispayments. But if you look at this chart that I'm going to show you, this gives you a sense of what's happening with credit card debt with the wealthier parts of the US. So you might see that the lower income, the middle income, you know, the common man or common woman, as you said, Scotty, seeing credit card
Yeah.
debt levels soar past pandemic, you know, levels, right? The wealthier segment, of America, at least anyway, their credit card debt still remains below that 2019 high. So they're far able to absorb the inflation that the common person sees and continue spending. And they still have room. This is the other thing, the major thing that I'm trying to point out here. They still have more room to borrow to fund their spending, right?
Yeah, I mean, unfortunately, at all times of crisis, it pays to be cash rich, which is unfortunate. And I guess as well, I mean, if we're taking, I don't know how that's broken down as regards the wealthy, but if you think how retail traders have done, retail traders in the US this year have been the best performing hedge fund, I guess, of all time, on the basis that they bought the way down. So yeah, I think it's quite difficult to get a real clear picture. And I think there's so much data out there that's quite conflicting, which is why for us it's a very difficult market call right now. And it's very difficult to if you honestly held a gun to my head for between now and the end of the year, I could see how the market might be up 5 to 10% or down 15 to 20%. It's just, you know, I don't think it's ever been so difficult for me personally to try and rationally break down a thought process for a market forecast for, say, the rest of the year.
I agree. That's why I've been saying on the show, and you see me saying on Twitter, yeah, this is a change market, trader friends. Trump 2.0 is a change market, and we have to adapt or get your fingers burnt. Lots of big names set to report soon. Walmart, Home Depot, you know, Target. We're going to get more data from the likes of these listed names as to how US consumers, this is more Joe Blogs, feeling. What do you think is going to come out of Jackson Hole? I know we've talked at great length about this, but Scotty, your view on what's going to come out of Jackson Hole?
I mean, everybody gets very excited about it. For me, from what I remember, is a lot of the time it seems to go by and pass, and nothing really happens. Although it has been used as a platform for the Fed chair to signal a policy change. I mean, Powell back in 2022 used it as a forum to say, listen, higher rates are coming, you better get ready. He also used it for the forum of saying rate cutting cycle is about to come. That doesn't necessarily translate into immediate policy action straight away, but I think a lot of people are going to be looking for a shred of some kind of shred of acknowledgement. But he has been so steadfast in all his press conferences since March. And because I think some of the other Fed chairs are breaking rank, and look, he's a human being. Is he thinking that he's got a few months left in the job? Why change his whole structure now? Why switch direction? I mean, you got Michelle Bowman and Waller are actually speaking this week. There's a crypto event at Jackson Hole. I think they're both scheduled to speak tomorrow, and they've been two of the real kind of breakaway doves who you've seen say something. So even that's a crypto event, I find it impossible to imagine that they're not going to say something on rates. But yeah, for what is generally supposed to be a quiet time of year, I think the markets will be taking every word that he says and trying to hope to digest it into some sort of a policy direction.
Yeah, I'd love, I mean, JP especially, I'd love it if, you know, we know that his term's coming to an end, right? Can you imagine if he did a drop mic or he did a huge speech targeted at Trump? There's also a really amazing meme yesterday. If you haven't seen it, it's about this is a joke, of course, the Nobel Peace Prize Committee saying, should we give it to Obama again, just for fun? See what happens.
Yeah, I can. It's when you said about memes, I thought you were actually about to say, I'm sure you've seen the Wolf of Wall Street one from a few weeks ago, featuring JP, and he just says, I'm not leaving. I'm not
Yeah, I'm
leaving.
not leaving. I'm not leaving. Right. I'm not leaving because we are counting down to the all sessions and we have it on right now. I'm just getting my chart up for you. Here we go. There is the bell and popping up the chart for you and zooming in there. Right, opening bell. Here we go. Out of the gates. We've got Palo Alto, one of the big gainers there, just shaking out right now, up 5.3%. We've got Lumen Technologies also up higher. AMC, speaking of meme, this is, of course, the meme stock up 1.7%. Any of those names pop out to you, Scotty?
I don't think at this early stage, nothing's really jumping out to me. It's all as I would sort of expect. I think in the bigger picture, futures just looking a bit lackluster. So I would imagine some of these, spicier names will look to take the earlier running rather than any of the big stocks.
Yeah, Delta Airlines also up slightly higher. Lululemon, go Lulu. Ange is on the Lululemon camp. SR is on the Nike camp. It is up 0.2% there. Let's change over to the losers list now. Peloton Interactive, all sessions on our platform, very volatile, that one, but mostly on the downside. Peloton down 0.2%. Hims and Hers also lower their Monkey Man if you have joined us this morning. Scotty, some of the oil stocks are lower.
I can see that. I see that. I mean, I know Rich was probably not in agreement of the call for, what was it, $58 oil?
Yeah, he wasn't.
If the deal goes through. I mean, I
think this is all a reflection that a likely deal is going to happen, or at least there's the expectation from, the signs from the oil market, right?
Yeah, I'm just actually looking at, excuse me, moving my head because obviously I'm at home. I just have to move my head to access. Yeah, I mean, Brent and West Texas are sliding. I mean, for Brent, 63 is the pivot level that it seemed to use back in about kind of April, May time. Again, West Texas is also sliding. So I would imagine in the short term that you could see these things under a little bit of pressure. But I do think that there's scope for disappointment again because you've had the European leaders as well out in force. It's quite hard to see a conclusive statement. But I can also see some of Rich's argument for not seeing oil sub 60 materially, because if you think every time now OPEC Plus speaks, it's about increased output, and the oil market for the most part doesn't really seem to care. So I think that whole increased output or increasing output across the curve is probably priced in. I think now you're looking at headlines, as you rightly say, and even things like oil vol, which is OVX for any of you. For any of you people out there who love to know these little idiosyncratic things, I mean, oil vol is back to sort of levels in early April before the big move. So yeah, it's calm, sliding lower. So I don't think the market's necessarily expecting anything tremendously exciting. But it's certainly, I think if you were watching anything at this early part of the week, it would be oil.
Yeah, it is, vol is remaining quite stable at the moment. What I want to check on in the commodities space as well is gold, although it remains well bid amid the low near-term global rate expectations. It still is stuck in that channel, as we talked about earlier on. We had a poll about this as well. Bitcoin as well remaining well bid, but also, of course, we had that correction recently, dropping below that $115 mark. Let's switch over to the main markets now. Looking like a very lackluster day at the moment. Europe just pretty much flat there. US, the NASDAQ and the Dow and the S&P 500 also looking like they are just kind of wait and see before, I guess, Jackson Hole and this possibility of that peace deal. Do you think that finalize, this will be inks potentially in the next 10 days? Do you think this is something of fiction or possible reality?
I think that Europe will be more nervous if the concessions that they're talking about of letting him have the Donbass is realised. Because I don't want to show my age, but things like appeasement generally are not taken particularly well nowadays. Although again, where do you go forward? I mean, this is what, 3 years now, 3.5 years, where something has to give. You know, for the sake of humanity, something has to give. And again, if you are the European leaders, you don't want to be seen to be acquiescing because it looks like you've lost. I mean, you think of Europe this year, where they've had that massive stimulus bill for defence, and they've finally started to put their hands in their pockets. If the first thing that they do after doing that is then sign a deal, so it's just a really difficult thing to see. It will be clean cut, but I just hope I'm wrong for the sake of all the people who are on the front line of either side of that conflict.
Absolutely.
That you do want some kind of resolution, yes. Whether it comes this Friday, I think I can almost see, I mean, I'm a bit cynical where politicians are involved, because generally if you get a load of them in one place, something's going to happen, because they love a big photograph in front of all the flags standing at the podium. So if you get a load of them in one place, for me, there's always a chance of something happening. But yeah, with the people involved and the personalities involved, I don't think it's that easy to forecast.
Right, let's have a look at some of the defense. I always get asked, Ange, why do you split them up the way that you do in your watch list? This is the EU watch list that I've got here. As you can see there, the defense stocks overall dropping some 0.7% earlier this morning, pressured by the news of that potential deal of the Ukraine-Russia summit. So you see some of the European names here that I've got on my screen. The Thales, the Rheinmetall's rank is also lower. And then I have a US defense list as well, because these are the ones that I'll be watching. When seeing Lockheed not registering big move, Boeing is just ever so slightly lower, but the Northrop Grumman's and General Dynamics, which is not covered in our all sessions, likely to move higher when the cash session starts. Speaking of which, quite a quiet week before Jackson Hole, other than a smattering of the retail names that I mentioned. We have a few economic data points, so the UK CPI. Any others that you're looking at, Scotty, that might create waves in the markets?
Let me just check. I was just bringing that up as you were speaking, so just bear with me a moment.
Whilst Scotty's doing that, I'm just going to put my scanner on just to see whether there's been anything that we've missed recently. Palo Alto is one that I want to have a look at, because I saw this earlier as you were speaking. Palo Alto, there we have it, up 5.6% there, just showing you the minute chart so you can see the move there on the all sessions. And Palo Alto moving higher after the company forecasts a full year profit and also sales that beat the street. Also checking out Intel in pre-market after we had, let's see if there's a continued reaction there. There we have it, up 5.8% there. This is the minute chart, trader friends, to show you what's been happening. Intel rising after that $2 billion equity investment by Softbank. That's giving Li Bhutan some time there to turn around the company. So those are the two big movers so far at the moment. I want to also check on RTX, which formerly was known as Raytheon, for those of you that cover this space or have a position in this space. Not doing very much at the moment, but they did sign an MOU with Deal Defense for a Stinger missile collab. Right, Scotty, what's the rest of your day looking like?
Packing bag for my trip. off to South Africa tomorrow.
Oh, that's right. You're going to safari, aren't you?
That's right. Yeah. One of the things we have booked is a walking safari in the Kruger. So hopefully I won't get squashed by a hippo, and I'll make it back to see the new studio, which would be good. But yeah, very exciting. There's quite a big group of us in total, and it's the first time for our nephew and our friend's son. They're taking along with us. So yeah, looking forward to that. Seeing a few old friends in Joburg I used to work with. So yeah, can't wait.
Very, very nice indeed. Apparently the not crushed by hippo, but apparently many people get injured by the splashback if they're standing too close and the hippo has a wee, because it comes out boiling, apparently, the temperature.
Yeah, I wouldn't want to get in the way of that.
On that note, loads of people out there and our trader friends as well saying thank you very much. It's been such a pleasure having you on, Scotty, and thank you for braving the home office setup.
Yes, it was exciting. A little bit like a roller coaster without the harness on, but we got there in the end.
A bit like the markets with Trump in play. We'll get you back into our brand new studios ASAP. Until then, have a fab holiday. And trader friends, thank you so much. Pelican, I'll answer you on that stock on email. I've got your email. Bigger Beers also, loads of messages there about American Express and credit current delinquency rates. We will catch up offline. Thank you everyone for being such a star, and the community for supporting us as we build our brand new studio. More behind the scenes later today on my Twitter, Angeline Ong. If you want to check that out, you'll see what's happening in the rip out of the old studio. Right, we will see you.